Alrighty traders, this is Taylor Horton checking in with the nightly video for Tuesday, June 15th. So, as of late, I've been pretty bullish over here on the tech stocks, and generally speaking, technology has made the move I was looking for. So, you rewind the tape here a few days ago or a few weeks ago, we have the daily squeeze with a bullish structure. We're above the 21, positive histogram, positively stacked moving averages, the whole nine, and the squeeze fires long, and we got the push into +2. It's pretty much a move I'm usually looking for. So the Qs make that move, and if we check out the big Amazon over here, Amazon had the daily squeeze, it pushes off the 21, Amazon's up here at +2, and then Google's been pretty kind to us this year. As good of a chart as this is, everything about this is bullish. You have positively stacked EMAs. Bullish momentum is increasing on the monthly, the weekly, the 3-day, and the daily time frame. Awesome looking chart, but the easy move here for Google, that ship has sailed. For me, the easy move is find the squeeze, build a position here at the 21, and then take profits on the push towards +2 to +3. So there could be a little bit more upside here for Google. There could potentially be a little bit more upside here for Microsoft, and there could be some more upside here for Amazon and even for Facebook. But you do got to take into consideration they've all pushed into +2 ATR. This isn't necessarily the time where you look to get super aggressive. So I think you save your max position size for those entries back inside the squeeze at the 21. If you're looking for a little bit of momentum, I think you certainly consider scaling down position size, and you focus on lower time frame squeezes. So, a good example here is Amazon. Though that daily chart is extended, if you're looking for a little bit more momentum to the upside over the next 24 to 48 hours, here's a good looking hourly squeeze with a bullish structure. Positively stacked EMAs, you've got green 10x bars, so that could be good for a push into the end of the week, but I think you go about trying to catch that with a smaller position size. Save the big boy positions for the squeezes down here. That's where you have the most potential for a nice push into +2 to +3. Once we have already seen that push unfold, could continue to go higher. There's also a growing probability that sometime soon we're going to lose a little bit of momentum and begin to pull back down towards the 21. So generally speaking, the Qs, the Amazons, the Microsofts, the Googles, they made the move I'm looking for. But then if we look at the S&P 500, this is an interesting chart. There's nothing wrong with it. Daily squeeze, stacked EMAs, you got a couple green 10x bars, the daily is neutral here. It's a good looking structure. However, it's been the same structure for over a month here. So back in early May, we start squeezing and we continue to squeeze and we squeeze. And at this point, we're squeezing ourselves silly. The SPY can't even commit to a close above +1. And if you look at a few of the different sectors here, while technology has been leading the way, there's a little bit of pressure out there. So primarily, if you look at the transportation sector, this was one of the leaders, right along with the financials, the energies. The transports were pushing along nicely here. So we make the good push, we hit +2 to +3, you get the pullback, and then we go into the squeeze here, but over the last week or so, there's a little bit of a loss of structure. The histogram turns negative, you lose the stacked EMAs, the daily chart loses the green 10x bars, and you got a loss of momentum here. And then if you look at the industrials, now by no means is this a chart that's breaking down, but it is a loss of momentum. 1, 2, 3 or 4 closes under the 21, no more stacked EMAs. It's not breaking down, but it's a loss of momentum. So is the S&P 500, which remember, this is just made up of industrial stocks, financial stocks, energy stocks, etc., is we continue to squeeze ourselves silly here. What we don't want to see, if you're looking for that big explosive push into +2 to +3, what you don't want to see is signs of exhaustion and a loss of momentum for the different sectors across the board. So I do think it's interesting. The recent leader here, technology, still looks pretty solid, but it's made the high probability move. You could get a few more days of upside potential here, but I do think, I think the ship has sailed in terms of the opportunity to build up a big position here for technology. So my game plan here is see how the next few days go. The market was pretty much at a standstill here today, waiting on the Fed tomorrow. But I think if you get a few more days of momentum here into Friday, you take advantage of that momentum, you'll lock up your long positions. Then I do think potentially time to start looking for a few shorts. So the transports here, to me, this is shortable. Under the 21, negative histogram, no stacked EMAs. If we can get a bounce back up towards that 21 EMA and then get rejected, I'll be looking for an out the money call credit spread, looking for a flush to the downside. I also think, now don't come at me here, don't come at my neck. I know we got a lot of Tesla fans, but just looking at the structure of Tesla, think of how strong the market has been over the last 2 months. And over the last 2 months, all Tesla has done here is consolidate under the weekly 21 EMA. So ultimately, if the market does begin to lose some momentum and we do top out over the next 1 to 2 weeks, market begins to roll over a bit, I think you see Tesla do very much the same thing. So you got a weekly squeeze with what I would argue is a pretty bearish structure. And the daily chart here is a total mess. You have negatively stacked moving averages. You have red 10x bars on the 3-day. It's just sloppy stuff here. So for Tesla, looking for a little bit more momentum here into the end of the week. I think if you get a decent bounce here, this is all about timing. Timing with the overall market, but if we do start to see signs of exhaustion for the indexes, I like a call credit spread here on Tesla with short strikes around 640, looking ultimately for that weekly squeeze to fire to the downside. And then one more name you could throw into the mix here, I think, is Netflix. Again, market continues to grind higher over the last 2 months. All Netflix has done is just chop itself back and forth inside of what I think is a pretty bearish structure to the weekly squeeze. No positively stacked moving averages. The 10x bars are neutral, and the histogram is just bleeding out here. So you look for a little bit of a bounce into Friday. Then I think I'll be taking some consideration to an out the money call credit spread, looking for ultimately into July, this weekly squeeze to fire to the downside, which for weekly squeeze fire short, you're looking for at least -2 to the downside, which would be about 445, 450. So when we're looking to go short, you got to keep in mind you need the overall market to have signs of exhaustion. If the market continues to grind higher, looking to short isn't going to be the easiest path towards hitting those weekly, monthly goals. But if we do top out here shortly, focus on those kinds of structures, things that don't have positively stacked moving averages, things that are trading under their 21 with a negative histogram. That's a buildup of energy, and if that energy gets released to the downside, there could be some profitable opportunities there. So that's my game plan. Be patient here, see how things go tomorrow with the freaky Fed, and if we do get a little bit of momentum, I think you take consideration to locking up those profits on any long positions, especially these tech stocks here. I love my tech stocks, I love my Amazons, my Googles, but the time they get aggressive, that's back here at the 21. And on this push into +2 to +3, you're looking to take profits into that strength. So, never a dull moment here in the market, but those are a few things I'm keeping an eye on, and look forward to talking to you in the next video. Trade safe. What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.